Hi everybody, it's Professor Jakovich again, and we're going to talk bank reconciliations this time. I like these because they're easy. And a little bit fun. It's a little bit of detective work. So let's jump into it. The best way to teach bank reconciliations is to actually do one. So over on the left, yes, and it looks like my handwriting's really shaky, but that's just the software. It's hard to make it look good. But over there you see a whole bunch of reasons why the bank statement that our company gets every month from the bank saying, here's the cash you have, doesn't match what we think we have. So there's a list of steps, but essentially it can be boiled down to 4 steps that you do in a bank reconciliation. The very first one that you do is when you get your bank statement, you cross out everything that matches between your books and the bank statement. You write a check for $1,000 and you took it out of your cash account. You say, okay, there it is in my cash account. I can see the credit there. And look, here on my bank statement, they took $1,000 out of my account. Cross those two 1,000s out on your books and on the bank statement, and because they match. There's no reason to do a reconciliation. And you go item by item. Everything on the bank, is it on your books? When I say, is it on your books, we're talking the cash account. Checks and dollars, actual green dollars, are what goes in and out of the cash account. So, everything that's left is what you see here on the left, number 1 through 10. Those are the things that didn't match between the bank and the books. It was either on my books, but not on the bank statement, or it was on the bank statement and not on my books. So here's how we reconcile those differences. The best way to do it is to kind of just do a running total. So over here on the right, I'm going to have to do this a little bit small. I'm going to write bank, meaning bank balance. And then I'm going to write books, meaning my cash account. That's really what we're talking about when we say the books. We're talking about the cash account. So we have to figure out what of these 10 items are going to be adjustments to the bank balance or adjustments to our books. Now, of course, we can't go to the bank and say, hey, you need to change your balance. But we're just going to do it here on paperwork to make sure, what cash do we really have? Obviously, what we have on our books probably isn't correct. The right answer of what cash we have lies somewhere in between what the bank says we have and what we say we have. So we put the balance that the bank says we have down first. And the bank, in this example, says that we have $5,900. So I'm going to start with that. Bank says I have $5,900. And on my books, I think I only have $3,340 in cash. I've apparently written a bunch of checks that the bank doesn't know about, but it could be other reasons. Now, there's a little key to remembering which of these will be adjustments to the bank and which of these will be adjustment to the books. If any of you ever watched the Simpsons cartoon, remember when Homer Simpson used to make a mistake and he'd bop himself on the forehead and go, "Dope"? Now that was spelled like this. Dope. But when the bank makes a mistake, the acronym is not DOH, but it is DOE. It's DO, a little bit different. So any adjustments we make to the bank side follow DOE. DOE. Now I'm going to tell you what that means. Every other thing, if it's not D, O, or E, it's an adjustment to our books. So the first thing we want to do is say, what's an adjustment to the bank? And then everything else will be ours to correct. So D equals deposits in transit. And what that means, somebody paid us with a check and we sent the check to the bank. what's the first thing that happens? When we get the check, we're going to add it to our books. Say, yay, we have another asset. We have this money. We send the check over to the bank. Well, you know what? Maybe the bank's cutoff was before that check got there. So that's a deposit in transit. It's like it's flying in between. It's in the clouds. It didn't make it there yet on time for them to record it. So it's a check, a positive check to us that's flying through the air and on its way to the bank. We wrote it down, but they don't know about it yet. So that is a bank adjustment because we're right, they're wrong. We have that money. O is outstanding checks. That's sort of the same thing. Except instead of being a deposit, it's a check we wrote, maybe to pay our rent, pay utilities. We took money out of our account and the check is flying on its way over to the bank, but the bank doesn't know about it. We're right, they're wrong. The money isn't ours anymore. We took it out. They haven't yet. So D and O both are checks flying through the air. Just one is a positive and one is a negative. And E is any bank errors. If the bank makes a mistake, they have to fix it. We can't fix their mistake. But we certainly want to do the reconciliation to see if they made one. We'll call them up and say, hey, you goofballs, that check was for $1,000 deposit, not just $100. Okay, so those are the 3 reasons that we would make an adjustment to a bank balance, meaning that everything else that we see on the list to the left is not going to be a change to the bank. It's going to be a change to our books. To circle all the DOE stuff. So number 1 is not a deposit in transit. It's not a bank error. And it's not an outstanding check. Nor is number 2. But look. Number 3, outstanding checks. That's an adjustment to the bank. The 4th one isn't. The 5th one isn't. Number 6, the bank took $100 by mistake. What that means is that some other company, not ours, wrote a check and they took it out of our account instead of that other company's account. That would be a pure error, and that's a bank adjustment. Number 7, deposits in transit, bank adjustment. None of the other ones are adjustments to the bank because they're not deposits in transit, outstanding checks, or bank errors. No. So the bank follows the no. I made a mistake, or I need to fix that kind of thing. So let's deal with that. Let's make these adjustments to the bank. Number 3, outstanding checks. Those are checks that we've written to pay our rent or something like that we took out of our cash balance, but the bank hasn't yet. So do we add it to the bank balance or subtract it? Those are checks we wrote. We're paying money out of our account. So the bank balance is too high. So we're going to subtract $1,340 right there. Okay, that one's done. So I'm going to put a little line through it. Done. Number 6, the bank took $100 from our account by mistake. Well, that means the balance they're showing is $100 too low. That wasn't supposed to come from our account. So we get to add that back in to be the correct balance. And then cross that out. We've taken care of that change. Number 7, deposits in transit, $1,600. That's money, checks we received that we sent over to the bank for them to record, and they haven't recorded it yet. Deposits, that's money that we've earned. We want that to show there, so we definitely are going to add that and say, hey, we have more money than you thought. Those are the only changes to the bank. So what does that total? Well, if you break out your handy-dandy calculators, you're going to see that that is $6,260. Now, book balance. Everything else is an adjustment to the books. Now you just have to think about it. So, the bank collected our account receivable for us. Somebody owed us money, and they paid it. The bank collected it for us. That's a service we pay them for. But they did that. So we have $2,100 that we see on our bank statement that we didn't know we had. So we get to add that plus $2,100. Yay, we have money we didn't know we had. Cross that out. Second one, earned interest. Hey, the bank statement says we earned $30. That rocks. That's going to be a plus up. That's $30 we didn't know we had. Add that. Number 4, EFT receipt by the bank. What the heck does that mean? EFT stands for electronic funds transfer. That's like direct deposit. So, essentially, they received funds on our behalf for us. It's like they're doing collections for us electronically. And we didn't know about it till we got our bank statement. So, once again, we have $900 we didn't know we had. Yay! We get to add that. Oh dear, NSF check. Joe Bag of Donuts wrote a check, and we added the $50 and sent the check over to the bank. We get our bank statement back. Non-sufficient funds. That's what NSF stands for. That's a bounced check. That $50 was bad. The bank sent it back to us without any action on their part except to give us back the check and say, you're out of luck. Well, we have that $50 on our books. We have to take it back out. It's no good. And now we got to chase down Joe Bag of Donuts and break his kneecaps or whatever it's going to take to make him write another check that's good. Okay, that brings us to 8. Bank service charge, $20. Hey, they're charging us money. So that's probably for those electronic fund transfer receipts and things like that they're doing on our behalf. So we got to pay them. That's $20 we didn't know we owed them, but when we saw that, we do. So $20 out. Electronic funds transfer payment by the bank. Guess what? That's your web bill pay when you go online and pay it directly from the bank. Now, perhaps you know about that, but it could also be sent up as an allotment or something that just goes without you checking. And once you get the statement, then you go, okay, good, you paid that bill for me, that automatic bill every month. Now you have to take it out too. The bank paid it for you, and you have to record that it's paid. The last one says, quite plainly, book error. We made an error. We recorded that we paid $510, but the check was really only $150. So we have to add back the difference, which is $360 to correct that error because our book balance was too low. Well, that's a lot of crazy math, but if you get your calculator, you're going to see that, voila, we have done a successful bank reconciliation. Our two numbers match. The only action that needs to happen at this point is that we need to contact the bank about this $100 error. I hope you kind of enjoyed bank reconciliation. It's like I said, it's a little like detective work. See you in the next video.